You know what they say, that it takes money to make money. That is very true. But the great thing about Forex trading is that you don't need a lot of money and capital to be able to grow a small account and transform it into a large income dispensing machine for yourself. If you really know how to do it correctly, you can transform your life completely in a very short time and make yourself an aura of hope for anyone that comes across you. And today, in this video, I will be using my 9 years of trading experience as a Forex trader to show you how I will turn a $100 account into $10,000 trading only Forex. I am going to show you all the risk management plan involved in it, and at the end, I will also be teaching you the best trading strategy that we are going to be using to safely grow the account, the best time frame to grow it, and a lot more. If you skip any part of this video, you are going to be making all the strategies a very hard one for yourself. But before we fully get into this business, do well to like this video in order to help other traders find this video and also become able to grow their small accounts too, and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into this business. Now, in order to start growing your Forex trading account, there is one very important thing you really need in order to start the journey in an easy mode, and that is a good broker. It is the number one thing that will determine your success with your trading account growth. As a lot of bad brokers can manipulate the market against their customers, if you don't want that to happen to you and you want to have an easy trading journey growing your account, I present to you Deriv Broker. Deriv Broker is not only a broker that I am in partnership with, it is the only broker that I have been using since my 9 years of trading experience. Other brokers failed me. This is the only broker that helped me have a great and smooth trading experience till date, and in an ongoing promo with Deriv. If you register with my partnership link in the description box below, you will be getting a whopping 10 days free trading signals in my premium trading signals group, meaning that you don't have to pay the $50 monthly subscription fee for my 30 days premium signals group. You will be getting my premium trading signals for free for 10 trading days, in courtesy of Deriv. Once you are done registering your account using the link in the description box, send a message on Telegram to be added to my premium signal group for free. Please note, this offer is only valid for new Deriv users and not for existing customers. Now, when we have a good broker already, we will start to plan on how we are going to grow the account, understanding the correct risk management plan involved with trading a $100 account, and aiming to grow it safely and successfully to $10,000. Now, there is no way that you can succeed in anything in life without creating the proper planning for it. I know there are some traders that love to over-leverage their account. They want to become the next Elon Musk in a very short time. They want to buy a Lamborghini in the space of 1 week. They look at the whole market price movements, and they feel like they can enter and exit the market at any time of their choice. But their greed will always bring them down, because the market does not belong to any of their family member. The weight of the leverage of which they load their account with while trading their small accounts is like a tortoise trying to carry an elephant. I wonder how that tortoise will survive. But that's the same thing that many traders are always trying to do every day in the market, and they wonder why they always blow up their trading accounts. But mind you, I'm not completely against using high leverage on trading accounts. In fact, I use very high leverage on my account on special occasions, but that always works better for large trading accounts, and a very calculated risk on small trading accounts. But when you are trading with a small account like the $100, you are only looking forward to grow your account with the safe risks first, and then risk your realized profits for the high-risk trades. High-risk trades are not meant to be traded with your immediate trading capital. They are only meant to be traded with excess profits and a calculated risk. And for a small account like $100, in the beginning we want to find a lot size, where we will be risking highest 5% of our trading capital on a single trade. That is $5 maximum loss on a single trade, meaning that we will be having 20 trading opportunities to grow the account. 20 times $5 is equals to $100. Follow me carefully on this. And now, I know you may want to ask, but Trading Chief, what if I blow my account after trading the 20 opportunities? Well, not when you are using the trading strategy that I am about to reveal to you in this video. You will have to focus on using the smaller lot size first. I won't really put a unit to it, because not all lot size move with Thesum volume on all trading assets, but keep in mind to only risk a highest of $5 loss on a single trade, and a profit target up to $15 or $30. This way you get to minimize your loss and increase your profits. And with all that understood, now let's move into the trading strategy that we are going to be using to grow our $100 account to $10,000. But before we get into that, I want to tell you all that we now have a Telegram channel where I share all my trades and signals, my live trades, my mentorship students' reviews and a lot of offers, like the one I told you earlier in this video. Inside there, you can contact me one-on-one, and I will reply your messages in minutes. To join us, use the link in the description box below. Now, back to our strategy. For this strategy, we are going to be using order blocks and the break of structure strategy. Order blocks are undoubtedly one of the most responsive trading strategy in the market. With order blocks, you will know exactly where you are looking out to take a trade, and the exact areas to place your stop loss, and your take profit target. I've used order blocks to grow impossible small trading accounts myself, and this may sound so amazing, but during my broke days as a trader, when I was a brokey, I have grown an account from $0.08 to as high as $4. As impossible as that will sound, I did it in a day. That is like growing an account from $80 to $4,000 within 24 hours. Even my students have done incredible heights like that. One of my students raised an account from $10 to more than $1,000 within 3 days. If that $10 was a $100 account, he would have ended with a huge $10,000 calling in his bank account. And after some time, when you follow all these things that I am teaching you in this video, you will also begin to raise small accounts on easy mode. But first off, follow me carefully on this strategy. Before you identify an order block on the chart, you must always wait for a break of structure. And for the beginners watching this video, a break of structure happens when the market takes out the last higher low or lower high of the opposite price movement in order to initiate a reversal. For example, when the market is moving in a downtrend and the buyers wants to reverse the market to an uptrend, the buyers will first of all take out the last lower high of the sellers, trade above it, and in the process causing what we call a break of structure. And if the market is moving up in an uptrend and the sellers want to reverse the market to a downtrend, the sellers will first of all show their strength by taking out the last higher low of the buyers, trade below it, and in the process causing a break of structure. As traders, we believe that the break of structure reveals the strength of the opposing force and weakens the strength of the current forces of the market. So, when we have a break of structure, the next thing we want to do is to draw out our order block and wait for the market to return to it. And when the market returns to the order block, we are not going to enter the market immediately or blindly. Remember, we are trading with a $100 account here, so we must make sure every risk is worth taking. So, we are only going to enter the market when we see a good entry candlestick. The candlestick entry candle will give us the last signal and a go-ahead to enter the market. And for our entry candle, I've made a video about the best entry candlesticks for buying and selling the market. So for this strategy, we are going to be making use of one of those entry candlesticks. And this candlestick pattern is called the pin bar candlestick. So when we see a bearish pin bar candlestick, we will enter the market, placing our stop loss a few pips above the candle and making sure we are not risking more than $5 on that stop loss. And then we place our take profit target at the next low targeting a profit return of $15 and above. If the setup will not bring a profit return of at least $15, leave that setup and go for another, because it is not worth our $5 investment. And here you can see that this trade was a successful one. Now let me show you another example of this strategy at work. So here, we have the market moving down in a downtrend, and then we see a break of structure to the upside, taking out the last lower high of the sellers. And then we draw out the order block zone and wait for the market to return to it. And when the market finally returned to the order block zone, we wait for a bullish pin bar to form. And when we see that, we place our stop loss a few pips below the pin bar candlestick and our take profit target at the next high. And as you can see, this market was a successful one. The take profit target got hitted successfully. This strategy is very powerful if you are following these steps. Now, let me show you another example. So here we can see the market moving down, and then we see a break of structure to the upside. Normally, we cannot enter the market only because we saw a break of structure. We will have to draw out our order block zone and wait for the market to return to it. And when it did, we wait for a bullish pin bar to appear. And when it appears, we place our stop loss a few pips below the bullish pin bar candlestick and our take profit target at the next high. And as you can see here, the trade was successful and our take profit target was hit successfully. But hey, sometimes this strategy can go bad too, and you will lose your $5. But this strategy is so powerful and easy that 90% of the time, your trades will hit your take profit target. And as you progress in growing your account, you can start to increase the risk according to the amount of profits you have realized and your overall account size. So you can start to increase the risk from $5 to $10 and to $20 and more, depending on how far you have gone. Though this is not a financial advice, but I would like you to backtest all these concepts and strategy on your demo account and see how effective it works before trying it on your real money. Now, the best time frame to use in growing your $100 is the 15 minutes time frame. You can still go down to use the 5 minutes time frame, but you should not go above the 15 minutes time frame in order to minimize your risks in the process. Now, the price action trading strategy that I taught here works effectively, but if you are a big fan of the moving average indicator, I have made a video where you will learn on how you can use the moving average indicator to grow your small accounts fast. In this video you will learn exactly how you can use the moving average to make great profits on a small account. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.